Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed, or not mixed markets, we have quiet and lethargic markets today as we await the Fed meeting and announcements on Wednesday. Europe is up small, Asia is mixed. It looks like markets are on hold right now as we await for those statements, right?
Yes, and it kind of makes sense considering the type of move that these markets have had leading into today. And basically, a lot of it was fueled by a dovish Fed after they raised rates, earlier in the year. So with them coming out tomorrow and then not really expected to do much, people will be listening to see if they sound a little bit more hawkish, which I think they could, but I don't think it's going to be like definite that they're going to go and raise rates in June. Most people are thinking a little bit, closer to maybe the August meeting, but we shall see. But overall, like you said, Chelsea, you have Europe up small after a multi-day pullback, and Asia mixed, but mostly all these trends are in line because, like, you look here at the symbols, the EWG, which are the shares that reflect Germany, which is usually a proxy for Europe. And remember this downtrend we talked about that blasted above the 200-day? Well, all we really did here is come back and retest it. So very systematic. And if you take a closer look here so you can actually see the numbers, because we are all visual, you will see that we've had a really nice move off the lows, right? You have a trend that's still intact, it's not even testing it. You had a powerful move, and yes, would it have been great or showed real power if it held this gap here and continued higher? Well, you know what, we're not in that powerful of a tape, so a pullback to test the 8-day makes sense. We could have even came down to here. So all in all, in Europe, you still have a bit of a tailwind acting okay. And as far as the FXI, if you want to take a look there, the FXI still is probably one of the only sectors around the world that hasn't reclaimed the 200-day. So we'll see if that persists. If you look at the trend off the lows in China, it's still hanging in there, fine, not really a worry yet. But at some point, we'll see if it takes out the 200-day. If this were to break, maybe, the chatter gets louder there that, becomes back to being a bit of a headwind versus a tailwind. But all in all, this is still intact. It's been better to buy coming into this trend line versus selling down here.
S&P futures are up 3 handles after absorbing yesterday's weakness with the pivot low at 2,077. Would you say that this market is still acting constructive?
There's two camps right now. There's a camp saying, okay, 10 of the S&P sectors are all above the 200-day. That's very constructive. Mm-hmm. And then you have the other camp saying, well, we don't have a lot of leadership. There's no generals making 52-week highs. There's no power. There's no excitement. So you have to kind of agree with both. So you have to have almost one foot in the door, one foot out the door, because the trend off the lows might get tested again as of tomorrow. If you look at the chart here of the SPX, you will see that remember the double bottom. I like to review it because patterns repeat themselves. Then you had this little spot here where the market actually proved it could hold higher, that it confirmed this double bottom and then took out resistance, and then since then it's been above the 8 and 21-day. So we're coming into another one of these key spots. Remember this spot when everyone was saying, this ascending channel is going to break to the downside, and it held 2041. Well, we kind of have another level like that right here to base our trades off of. So if you take even a closer look here, you will see that yesterday, we did, like you said, we hit 2077 and bounced off it. And we also reclaimed the prior low here of 2081. I typically get long on something like that, especially after 4 down days. But I just was kind of like, what, I'm going to sit on the sideline, wait, get a little bit more clarity. I don't see anything really, pressing. And now you have this little bit of a wedge here. So the question is, can we take out this 2094 with some authority, and look as if we're going to, get back up to the highs and continue, or will we open up and kind of fail and stay in this range? So I'm not so sure, to be honest. So I'm probably going to let the first 15, 30 minutes play out to see if anything is showing some true weakness or true strength. At this point, this has been your normal about 30 handle pulling off the highs. You had it here. You had it here, and each time the rally has resumed. So we'll see what happens at this upper level if that's the case.
On the weaker side, we have the Qs, which broke its upper support. Now with Apple after the close, do you think that traders will focus on this?
Yes, because it's always good to watch what technology is doing. It's much better when it's leading to the upside than having faulty signals before the rest of the indices. So at this point, I don't think it's game over. There's enough money rotating where yes, we broke an upper area, but does that mean it's going to fall apart? So that's what we're going to watch. You look here at the Qs, you will see that yes, this upper range, which you'll see by the end of the morning call, that none of the other release sectors have broken it. Came already down and is retesting, some support. So at this point, there are some guys out there, okay, and we've seen this before that are already building, a potential head and shoulders top pattern with the left shoulder here, the head right there, and thinking that, maybe it bounces up a little bit close to 110, 110.26 gets rejected, and then there's your small head and shoulders pattern, which would then give you, a move lower if we were to break to the downside, and that would be your sell in May. But that hasn't materialized yet, so don't use this as your pivot area. And you talked about Apple. Okay, now let's talk about Apple. Earnings after the close. I think here, if you come back to me real quick, if you watch TV, I think every single person on TV is now talking about the disappointing year-over-year Apple revenues and the disappointing iPhone sales and et cetera, et cetera. So I feel like they're really setting it up to bounce because the way it's been coming in. So you go back to the chart of Apple, you'll see that, first of all, the name has been pretty broken for a while. Okay, it hasn't done a heck of a lot in almost the last 2 years. Remember this high here that it couldn't get above with that gap down after earnings that gave you the measured move lower below the 200-day, and then when this trend broke, and all in all, it's still locked in this somewhat of a downtrend. So we did get a trade earlier this year, okay, which was a nice one, okay, because that's what we do. We trade tactically, and that's when it broke above this spot, which was about 98, and then held. And then if you remember that Friday where I was trading in Short Hills when I got stopped out of my Apple long, well, that was right when I lost the 50-day and the 200-day. So the question is, does it hold this spot? Okay, and this spot right now is 104.51. So basically, just on a quick note, I think now everyone's expecting 51 to 52 million iPhones. So if it happens to be a little bit more than that, you probably get your bounce. If it's sub 50, it probably continues lower. And then obviously they're going to talk about the iPhone 7 and talk about everything else. And we'll see more in fact tomorrow whether or not, again, from 112 to 104.50, is that enough, and is there enough pessimism around it to get an actual bounce? And depending on what Apple does tomorrow, it'll have an impact on the Qs that have already suffered some weakness because of last week's earnings. So we shall see.
Small caps and bios are still holding above the 21-day, but it seems like they might be a little on hold as well ahead of the meetings tomorrow and awaiting the statements from the Feds. Do you think that this can outweigh the weakness in tech?
Well, that's what, it's the bull case right now, is that there's enough participation from like the small caps, the bios, energy names, et cetera, that, okay, tech's allowed to take a break. So, you have to watch this close, because if this starts to weaken and technology makes lower lows, then maybe, this tactical rally, might correct a bit, considering we're going on almost 12 weeks. So if you look here at the Russell, you'll see that it did not break the upper area like the Qs did, okay, but it also isn't as close to all-time highs, but it is above the 200-day. It's above this spot. Here is your flag. So the question is, can the IWMs hold 112.66? That is your line in the sand. Okay, it gets below that, then all of a sudden you might get a discount to the 21-day, which it hit here and it hit there. So right now it's it's been a better buy here versus up at the 8-day, but we'll see if there's any power here, and that's what the market lacks. So if the Russell starts, or the IWM start getting above 114.19, then that would probably outweigh the weakness in tech. And as far as the bios, I've been focusing a little bit here also. It's still, I think, just fine. It's above the 8-day. There's not a heck of a lot of power, but as long as the IBBs stay above this 283, I still think there's a chance, if the market wants to rally, to get north of this towards the 300 area. So if you want a closer look here at the IBBs, this is the 8-day trend it's been above since breaking above that spot. Remember, we played that spot, which was pretty well. I went with the options, and a lot of people went with, let's see. Remember this spot right here? This is when it woke up, and it still acts well. Okay, so see if it holds this upper end of this little channel here, to get some power. And again, we're lacking power, so we need to have something have power. And then some guys are trading this LABU, which is the 2 times the bios. It's a little, it's definitely moves pretty fast for a small little scenario, but it is real tight here, and people feel like they can grab more than the IBB. And in order for this to get another move, it's probably gonna have to take out this 38.5, and you could do the same thing. You could have your stop right here at around 36. So we'll see if this wants to build to continue.
Oil took off yesterday. Now, Scott, what are some levels to watch in the energy names?
Yes, it definitely took the day off, and that's after a big move. So everyone's like, oh, look at oil down 2.4%, but meanwhile, it almost hit 44. So no one's really obsessing about oil the way they did. So a day off, not the biggest deal. You look at the chart of the USO, you will see that it definitely was nudging up against some resistance right here. So it didn't have enough power, which again, the market's lacking power, and then it took the day off. So we'll see what happens today, see if the USO can get back above 1047. If it can't, you have your 21-day right there. And if you do trade these oil names, they've been very active and lots to do. If you look at the macro chart here of the XLE, it's like, again, this is what's leading the tape. Moves off the lows, and look where this came from. So again, now looking like it's ready to break out. And remember when it broke the 200-day, that was your exit sign, or this head and shoulders top. This is why people talk about head and shoulders tops, because when they do trigger, they could signal an end of the move, especially when it takes out a neckline and the 200-day. So PS, this is the last support it broke. Here is your, bounce back to it. And now, let's fast forward to where we are, which is above the 200-day. Last time we were above it, we were, very small period of time. So it's actually showing more staying power this time, which is helping the bullish case. So, anyway, the last time we talked about the XLE was after the Doho scenario where you could have been a buyer at 62. And now I would say in order for momentum to stay, you want to make sure it holds above this, 65.79, and then perhaps another flag to salute to for another move. It's pretty comfortably above the 200-day. Now see if this 8-day momentum trend continues to stay in charge.
High beta tech lost some momentum last week as Google and Netflix went to the penalty box. Do you think that there's any cash flow trades here? And should traders be concerned about Amazon since they report on Thursday?
Well, it's like Amazon is the last one that potentially could actually beat and raise or not. And because if it doesn't, it's going to join the ranks of, like you said, Netflix and Google and some of the names that are in the penalty box because their earnings just weren't explosive. And that's, again, after a 14-15% move off the lows to 1 to 2% near the highs in the S&P and the technology, you need some explosive leadership, which we just don't have right now. So, like you mentioned, there could be a cash flow trade, though. Why not, right? You look at Google here. Overall, this channel is still there. Okay. Just the question is, how long is it going to stay in it again? So here's your overall channel, okay, which is still above the recent lows, and it's not a huge percentage off the highs, but it's what, like you said, in the penalty box. And what does the penalty box mean? It means that you have a big gap down, okay, and if this gap doesn't get filled or attempted to fill, typically it leads to a move to the lower end of the range because it shows that there was not enough demand here to fill this void. So we'll see, in the next few days with Apple and whatever, if this can get above 744, you then have your gap pivot resistance here, which sometimes could be a decent trade. That's at 753.92. Netflix is actually acting weaker. Netflix actually took out the post earnings pivot low. Okay, didn't have crazy downside follow through, but again, look how it's in the penalty box. Here is your big gap. It broke this ascending channel, and gave you a small little trade right here when it couldn't break below and bounced, and then it was weak, small little trade, and now it tried to take it out. So at this point, not a heck of a lot going on. Choppy, green, red, but a little bit of movement. So now we'll see if the market opens up green today and goes red. Maybe there's a little bit more downside here. But this, this is not acting as well as Google as of yet. But it's still, early in the earnings season, I guess.
Yes.
Oh wait, you know what I didn't do? Amazon.
Amazon, yes.
Yes, and Amazon's
reporting Thursday.
Yes, it is. So at this point, there's still some shorts in there, and they're still kind of a little worried that maybe Amazon, has a little better luck. If you remember, last report was not a good one for Amazon. So at this point, it's rallied back up to this prior resistance here. It's still above the 8-day moving average. Here is your highs. So the question is, does it get a small move, above this spot before earnings, and earnings are on Thursday. So, at this point, if you're trading it, okay, I wouldn't just overdo it. I guess if it gets above this little spot here of 628, it could head back to 640. Maybe they want to do another squeeze before earnings, but I think more people are kind of worried that it won't be enough considering the move that it had off the lows. So I wouldn't be so quite enamored with this, and maybe we'll just wait till Thursday. This trend off the lows is still intact, and now it's just really not that compelling right now. We'll have to wait till Thursday to see if we get any stronger moves.
Social media names could be active as Twitter earnings are today after the close and Facebook tomorrow. What does the landscape in these names look like to you?
It's kind of mixed, and some look better than others. So Facebook, which has been a go-to name of ours for so long, feels a little vulnerable, but it's been holding 109, and as long as it holds 109, you can't get too bearish. But we'll see what happens, before numbers, which are on Wednesday. You look at the chart. Overall, still one of the more constructive names out there. Still considered one of the best growth areas, across the board. So, it'll be good for the overall market if you want the market higher, for it to actually, have a good number, good guidance, and not too much expenses, and et cetera, and then take out this 116, and that would bring some power back to the market. But if it's in line and expenses are higher and there's a little less clarity, and this were to break, that would probably be, maybe another nail in the coffin of the momentum bull. So here is 109. This is what's been holding going sideways, and we'll see if that remains heading into earnings, which are on Wednesday. Twitter, I don't even think anyone's even talking about. Nobody cares about. Maybe that means sentiment's so bad that finally it could make a move. It is pretty tight here. Last time it came out with earnings, it was a bad report, and that's actually what spurred the rally, because this is where it was and got washed out and gave you a move. So maybe this time there's a move. You take a closer look here at Twitter. I guess it's just so whippy that it never holds. This would be your first spot after hours. It would have to get really above 18 and hold above 18 to maybe squeeze some shorts and get any interest. I'm in some $18 calls just in case. I had a really good LinkedIn and Facebook trade back in the day when nobody believed that they can go up, and it made some money. So I feel like I'm trying a little bit here. And since I just mentioned LinkedIn, that has numbers later this week, this too, look where LinkedIn came from. LinkedIn, was as high as 280, and now it's hovering at 120. So maybe this is enough for, a decent report to fill some of the gap that was from last quarter. I would not be long the stock. I would maybe go with options, maybe buy the 130s for Friday. I got to actually check to see if earnings are this Thursday or not. But anyway, some money's been put to work down here. This stock loves to gap up or down. Look at this, gap up after earnings, gap down, gap up, gap down. So maybe it's ready to, retrace a little bit. So, but we'll see. It's tight here. We had a little bit of a trade, if you remember last week, and I don't know, maybe beforehand, if it wants to go, it gets above this 22. And then this 122, and this is your 129 moving forward. So there's a little bit of room if it wants to make a push before the actual print.
With the Fed tomorrow, sometimes banks will come into play if they're feeling hawkish. Do you have a favorite bank trade for tomorrow?
It all depends on the setup. If you remember, at first I started with JP Morgan because that ignited the sector, and then I moved away from that because I saw the setup in Goldman Sachs, and now they all look kind of the same. JP Morgan is the only bank above the 200-day, so it is leading. So you want to know what the leader is doing with the banks. And if, maybe there's a little move starting today into the Fed statements tomorrow. Sometimes that happens, and that would probably help the broader indices for now. If you look here at JP Morgan, you'll see really the best time to have been in JP Morgan was right after this gap. Okay, this was the gap and go on earnings. You could have bought this and said, I'm going to put a stop in at the 8-day, and it never got back below the 8-day. So that's where it held yesterday. So in order for this to stay good, it's going to have to hold 63.15. And then the question is, again, with the lack of power, can we get another move in these, to the upside? So for JP Morgan, that's 64.66. Goldman Sachs went positive on its earnings, and its earnings were not so great. So now the question is, can some of these names make their way back towards the 200-day, which JP Morgan's above. So here is your upper flag. Here's your 8-day moving average. So, for power to come, in my note today, I just wrote a lot of this. I said, if Goldman Sachs could hold 164, there's a chance it could take out 167 to get to the 200-day. If Morgan Stanley can hold above 27.23, perhaps there's a trade to the 200-day, but in order for that to happen, it's got to get above this pivot, which it's flagging nicely and kind of tight for that to happen. If, just, you got to be consistent. Bank of America, which is already at the 200-day, could hold here and stay above, just say, 1480, there's a chance that, it gets, a little bit higher towards 1560. So that's kind of in my head what I'm thinking, like, if this happens, then that could happen, but, not, just things to do is it's not that compelling after, because base on base moves like that get a little bit more vulnerable to not happen and be more of a fake out.
Right. And metals, they still live in this upper range, but have very random movements from day to day. I know we've been going over this, so would you mind bringing up the chart of the GLD and kind of isolating some of the levels there?
We keep doing it, and it just keeps sitting in this upper zone, living there. I like that statement. So living in the upper area, and from day to day, though, it's been very hard to try and have edge there. So it's either you're giving it loose stops on the long or short side, or you're probably not that happy trading it because each day is like almost opposite day. If you look at the GLD, you'll see it had a nice consistent move when it took out this spot right here, which we went over earlier in the year. Then it took out the 200-day, and boom, big move until it got extended and then flagged and gave you one more move. And now, it's been almost 3-4 months, which some think are healthy because look at the size of the move that it had, that it's just, absorbing. So, but from day to day, it hasn't been tradable. So at this point, after Fed Day, maybe if it gets and closes above 120, you could cheat and add to your longs. If for some reason it doesn't like what it hears, and the dollar starts to strengthen because they're hawkish, maybe it breaks below this, this 117, and then you have 115. So you almost have like a little inside range around the bigger range, and then there's your 200-day. So I did buy the 120 calls here. I went out a month because I was sick of trading and it wasn't working for me. So I said I'll just spend a little bit of money just in case it does go. And at this point, I'm just letting it play out, and I still have 3 weeks left. So it's either going to be a 0 if it fails, or it's going to work out somewhat well.
Do you have any more closing thoughts?
I'm just kind of feeling different today. I came in yesterday with 6-7 longs. I traded around them. Actually made decent money in a down tape, considering I was mostly long with a hedge. What I guess I should have done is I should have just repositioned into the spiders once it took back Friday's low, for a little bit of a push, and then I would have some follow through this morning a little bit, and that would be, fine for the day before the Fed. But didn't do it, so I'm coming in pretty flat. I'm going to look at some of those stocks that are in the penalty box. Do they test the earnings gap pivot, whether it's Microsoft, whether it's Google? I don't think Netflix is in the cards for that. I'm going to see how Facebook reacts today. It's been a little weaker than stronger, but they could do anything they want to do prior to tomorrow. And, Apple's down 70 cents. Maybe they take it green, ahead of the print later. I'll probably be watching it and maybe trading it after hours. I might just wait till tomorrow. So I'm kind of just in this, uninterested mode where, it's been a decent run. I think I'm at the highs of my year and the market's not. So, it makes me happy. Traders always like to be at the highs of their year, and they hate to pull back. Just like the bulls with the market or the bears, whatever. So for me, I'm just going to let it come to me. And if I don't do much today, I won't. What I didn't go over? I didn't go over Tesla. So let me just put Tesla up. Tesla, was my focus yesterday. That's something I came in excited with. I was long Tesla. I was like, maybe, it breaks out above this 254, 255, and it didn't have enough power. So it came in. So that got me out, that little topping tail. So now I'll let it build, and maybe it'll go again in a few days, or maybe even today. Later it regroups, but that's a nice setup that turned into, okay, now I have to wait and see. So if you're in wait and see mode, you should wait and see.
Good advice.
There you go.
Thank you, Scott. Everyone have a great trading day.